OpenAI burst onto the global stage with ChatGPT, transforming AI from a niche technology into a household name. Suddenly, people everywhere were using AI for daily tasks, writing, planning, even creative work. OpenAI's mission, ensure artificial general intelligence, benefits all of humanity. The launch of ChatGPT was a leap toward that goal, with its human-like conversations astonishing millions. ChatGPT became the fastest-growing consumer app in history, cementing OpenAI as the leader in generative AI. Investors poured in billions, betting on OpenAI to define the future of technology. But the path of a pioneer is never smooth. Today, in April 2026, the narrative is shifting. Explosive growth is slowing and OpenAI faces significant challenges. The company is struggling to meet ambitious targets for user growth and revenue. Hype and sky-high expectations are colliding with the realities of building a sustainable business. Can OpenAI maintain its momentum, or is it facing its first major crisis? We'll explore the missed targets, massive financial commitments, and leadership's response. Rivals like Google and Anthropic are gaining ground, intensifying the competition. What do these challenges mean for OpenAI's future, and for the entire AI industry? The stakes have never been higher. The next chapter for OpenAI will shape the future of artificial intelligence. OpenAI set out to reach 1 billion weekly active users for ChatGPT by the end of 2025. A goal on par with Instagram and TikTok. Achieving this would have proven generative AI's place as a daily utility for billions. Alongside user growth, OpenAI aimed for aggressive monthly revenue targets, relying on premium subscriptions and enterprise API sales. These goals were crucial to show investors OpenAI could monetize at scale and fund its massive R&D costs. For CEO Sam Altman, hitting these numbers was essential to maintain investor confidence and secure capital for his vision. The targets promised that the AI revolution would be profitable. 1 billion users would create a data flywheel. More users, more data, better models. Meeting revenue goals would silence skeptics about the economic viability of large language models. With high operating costs, strong revenue isn't just desirable, it's essential for survival. These targets were the foundation of OpenAI's plan for long-term dominance. Missing them would have serious consequences. Trouble emerged in early 2026. OpenAI began missing its internal monthly revenue targets. The rapid financial growth slowed, hinting at market saturation for enterprise services and premium subscriptions. User growth also stalled. OpenAI missed its goal of 1 billion weekly active users by the end of 2025. The initial novelty faded, and ChatGPT hasn't become an indispensable daily tool for most. Missing these targets damages OpenAI's image of invincibility and signals vulnerability to the market and competitors. This can trigger a crisis of confidence, making it harder to reverse slowing momentum. The practical impact is immediate missed goals disrupt financial planning and threaten funding for future projects. For a company spending billions on computing power, a revenue shortfall is a serious problem. It also complicates Sam Altman's efforts to raise more capital for ambitious infrastructure projects. Investors now question OpenAI's true market size and path to profitability. The pressure is mounting. OpenAI's leadership faces tough questions about the company's future. As revenue growth slows, OpenAI is making enormous financial commitments, about $600 billion for new data centers. This historic investment is driven by the need for massive computing power to train and run next-generation AI models. Sam Altman's vision: build a global network of AI-focused data centers, reducing reliance on cloud providers and controlling costs long-term. The logic is clear. In AI, computing power is king. By owning infrastructure, OpenAI aims to create a durable moat around its business. But this spending spree is risky, especially for a company not yet profitable. The pressure to generate cash flow is immense. Is it wise to commit to such spending when core business growth is slowing? OpenAI's board now faces a high-stakes dilemma. This gamble could secure the company's future, or threaten its survival. Slowing revenue and massive spending have created a financial squeeze at OpenAI. CFO Sarah Friar has warned that without faster revenue growth, OpenAI may struggle to pay for future data center contracts. The economics of large language models are brutal. Every ChatGPT query costs money, and at scale, those costs skyrocket. So far, billions from investors like Microsoft have kept the company afloat, but that capital isn't endless. Now the board is scrutinizing recent data center deals and questioning Altman's aggressive push for more computing power. The focus is shifting from growth at all costs to financial prudence and risk management. This scrutiny is a significant change for OpenAI's leadership. The company's IPO plans add more pressure. Public investors demand strong growth, profitability, and a sustainable business model. If OpenAI can't control costs and reignite revenue growth, its IPO could be in jeopardy. The stakes are higher than ever. OpenAI must adapt quickly to survive. OpenAI's leadership is now shifting focus from unchecked spending to financial discipline. CFO Sarah Friar is leading efforts to control costs across the organization, scrutinizing every budget and demanding clear returns on investment. This marks a cultural shift, from a research-driven lab to a business focused on operational efficiency. The board is playing a more active role, questioning the assumptions behind massive infrastructure spending. Can OpenAI achieve its goals with less capital-intensive strategies? CEO Sam Altman must now balance visionary ambition with financial reality, reassuring both the board and his team. The next few months will test his leadership. OpenAI's ability to adapt will determine its future. The era of growth at all costs is over. As OpenAI faces internal challenges, competition is intensifying. Tech giants and startups are closing the gap with powerful AI models. Google's Gemini models now rival or surpass GPT in some benchmarks, leveraging Google's massive distribution through Search, Android, and Workspace. Anthropic, founded by ex-OpenAI employees, has emerged as a top competitor with its Claude models and billions in funding from Amazon and Google. The talent and expertise to build cutting-edge AI is no longer unique to OpenAI. This competition makes it harder for OpenAI to command premium prices and maintain profit margins. Customers now have real alternatives, putting downward pressure on revenue. The stakes for innovation are higher than ever. OpenAI must deliver breakthroughs to stay ahead. But R&D is unpredictable, and the next leap may come from a rival. OpenAI's lead is no longer secure. The AI race is wide open. The company must fight to maintain its edge. The pressure is relentless. OpenAI's ambition to go public by the end of 2026 faces new obstacles. Slowing growth and financial uncertainty complicate the IPO narrative. Public investors want proven business models, predictable revenue, and a clear path to profits. Missed targets and massive spending commitments raise tough questions. Intense competition from Google and Anthropic further clouds the story. OpenAI must restore confidence in its growth prospects, possibly by launching a breakthrough model or landing major enterprise deals. Alternatively, it may need to delay the IPO or accept a lower valuation. The road to the stock market is now a strategic tightrope. Sam Altman and his team must navigate carefully. The outcome will shape OpenAI's future. OpenAI stands at a crossroads, pioneer of the AI revolution, now facing the realities of building a sustainable business. Missed growth targets and massive spending have created a storm of financial pressure. Leadership's response, cost controls and board scrutiny marks a shift from research lab to disciplined enterprise. The challenges facing OpenAI mirror those of the entire AI industry. Can the immense cost of AI be justified by the revenue it generates? The path to monetization is proving far tougher than expected. OpenAI's future could go two ways. A breakthrough reignites growth and leads to a successful IPO, or continued struggles force retrenchment and scaled-back ambitions. Either way, the outcome will be a lesson for the whole industry. Even the most promising technology must obey the laws of business and economics. The coming months will be decisive, not just for OpenAI but for the future of AI itself. The world is watching,